Hello everybody and welcome back to the channel. Today we're going to be taking a look at HIMS stock and see if it'd be a good investment to add to our portfolios. HIMS is a health company. They provide everything from losing weight to regrowing your hair to getting smoother skin. As you can see here, these are pretty much what they provide. Now, the stock is currently at $41.88. It is up 66% year to date, but last month around April, it went down all the way to $27. And if we take a look at the overall history of the company, we can see at one point it was at $68. So let's take a look at the numbers and determine whether this company can be back up to its all-time highs or if this is currently just a push up because of the earnings they reported yesterday. Now, currently they have a buy rating of 3.28 out of 5. That consists of 14 total analysts that has 3 strong buys, 1 buy, 8 holds, 1 sell, and 1 strong sell. This is not the intrinsic value that we're going to be taking a look at, but analysts are expecting this company to reach an average of $43, which is already past that, to a high of 85. As you can see here, they beat their earnings that they reported yesterday by 0.06 cents. If we take a look at the EPS estimates quarter by quarter, we can see they've beat everything from 2024 and they will do so as well in 2025, except in Q3 they're expecting a drop, but then Q4 and Q1 of 2026 they're expected to beat the earnings year over year. Now, as always, when taking a look at the company, we always want the annual EPS estimates and the annual revenue to be increasing. As you can see, that is the case for this company, from 0.64 to 0.93, and then the revenue from 2.33 billion to 2.78 billion. If we take a look at the total revenues for this company, we can see that they have been increasing their revenues very high. As you can see, current trailing 12 months, it is up over what they did in 2024. However, one thing I do not like, but I mean, this is a company that's investing a lot, is that their operating income is very inconsistent. As you can see, it went from 15 to 106 million. Now it dropped again. Now it's back to 66 and it's increasing again. Usually when you invest in a company or in a safe company, if you run it, put it that way, this should be increasing year over year. The same as the gross profit, as you can see here, it's been increasing year over year every single year. Now, since this company is still attracting a lot of investors, they are issuing a lot of shares. As you can see, their shares issued is increasing. Again, if you want to have value investing or a value stock, you want this to be decreasing because this means the less shares out there, the more you own of the company. Now, if we take a look at the discounted cash flow value, we can see that this could be around $18.69. This is another calculation. It's not the same intrinsic value that I use, but as you can see, the base case is 26.91. The best case is 43.55, which we are already over that. And the worst case is that the company is overvalued by 54%, being valued at $19.23. Now, if we take a look at this chart, it compares the price of the stock compared to this EPS. As you can see, when the company was having negative numbers, obviously the stock price was a lot lower, and then once they started turning it around, the stock price continued to climb, which at one point, as we saw before, it was already up to the $68 mark. Another thing we like to take a look at when investing in a company is making sure they have more assets than liabilities. As you can see, HIMS assets pretty much doubles or triples their liabilities, and they have a very good free cash flow margin of 13%. Anything over 20, it's pretty great, but 13% is not terrible. Also, if we take a look at the return on invested capital, we can see the industry average is about 2%. This company's average is negative 25% because they just started turning around their profits, but their current return on invested capital is 48%. Now, this is the intrinsic value I have for this company. As you can see, with the growth rate projection of 21.9 over here, earnings growth rate 21.9, we can see that this company would be worth an intrinsic value of $27, and this is because they currently don't have a lot of EPS. Obviously, as we saw before, in the future they are expected to increase this, so this is obviously going to change. So let's say they change their EPS, I don't know, to $1, right? Then in that case, the company will be worth about $52.30. Do I think they'll get to $1 in EPS? Yeah, definitely. So that's why I'm taking a look at the stock. Full transparency, I have not invested in this stock yet. I think I sort of missed the train already with this. I think buying under the $30 mark was where it's at, maybe under 35. So I'm just going to wait. Really have no interest in this type of company. If it goes down back to the price, then I might invest in it. If not, well, that's just another stock that I won't invest in. Also, guys, if you want to stay up to date with the stocks that I buy on day-to-day basis, the link to my Patreon is in the description below. Make sure you check it out. It also helps support the channel. And as always, if you enjoyed the video, please consider leaving a like. Don't forget to subscribe, and I'll see you in the next video.